Have you noticed the buzz around cryptocurrency lately? It seems like everywhere you look, people are talking about digital assets, and the headlines are filled with stories of surging prices and new opportunities. The world of finance is shifting, and crypto is right at the center of the conversation. After a lull, the market is alive with excitement. Trading floors are bustling again, and investors are eager to jump back in, hoping to catch the next big wave. The main driver? The U.S. Federal Reserve just cut interest rates, making borrowing cheaper and encouraging investment. This move is designed to stimulate the economy, but it's also having a ripple effect across all asset classes. With traditional savings offering less, investors are turning to assets like stocks and, increasingly, cryptocurrencies. People are searching for better returns, and digital assets are catching their eye. This rate cut has sparked a surge in buying activity, with mortgage demand jumping nearly 30% in a week, a sign of renewed financial optimism spilling into crypto. The appetite for risk is back, and people are looking for new ways to grow their wealth. Analysts believe we're on the verge of a major market shift, with more rate cuts expected to keep the momentum going. The financial landscape is changing rapidly, and experts are watching closely. The stage is set for digital currencies to shine, and it's not just about Bitcoin anymore. Altcoins like Ethereum, Avalanche, and Solana are gaining traction as investors diversify for bigger potential returns. The crypto market is expanding, with new projects and technologies drawing attention from all corners. The combination of favorable economic policy and rapid crypto innovation is creating a perfect storm. It's a unique moment where technology and finance are intersecting in powerful ways. The excitement is palpable. Investors sense that something big is brewing. There's a feeling in the air that we're on the brink of something transformative. As money flows from the sidelines, the entire crypto ecosystem stands to benefit. New capital is entering the market, fueling innovation and growth. Whether you're a seasoned trader or just curious, now is a pivotal moment to pay attention. The opportunities are growing and the barriers to entry are lower than ever before. The next chapter in crypto could be explosive. We may be witnessing the start of a new era in digital finance. Let's explore how these economic shifts are shaping your wallet and what you can do to make the most of this moment. The Federal Reserve sets the tempo for the U.S. economy by adjusting interest rates, acting almost like a conductor guiding an orchestra. These decisions ripple through every corner of the financial world, affecting everything from your savings account to the price of your morning coffee. When rates go up, borrowing gets expensive, spending slows, and riskier assets like crypto lose appeal. Higher rates mean higher loan payments, so people and businesses often pull back on big purchases or investments, leading to a cooling effect across markets. But when rates drop, as they have now, borrowing is easier, businesses expand, and investors seek higher returns in assets like stocks and crypto. Lower rates can spark economic growth, encouraging both consumers and companies to take action. This easy money environment is fueling the current crypto surge, as more people look for opportunities to grow their wealth outside traditional markets. We're already seeing a spike in mortgage applications, proof that lower rates drive big financial moves. Home buyers are eager to lock in cheaper loans, and real estate markets often heat up as a result. Investors are more willing to take risks, pushing money into volatile but high-reward markets like crypto. This appetite for risk can create rapid price swings and new opportunities. But it's a balancing act. The Fed's decisions are based on complex data, and a pause in rate cuts could signal the end of easy money. If inflation rises or the economy overheats, the Fed may have to reverse course. That's why savvy investors watch the Fed as closely as they watch crypto prices. Every announcement or hint from the Fed can send shockwaves through the markets. A single policy shift can trigger a market rally or a sell-off. The stakes are high and fortunes can change in an instant. Understanding this connection is key to navigating the crypto landscape. If you know how interest rates influence markets, you can make smarter moves. The Fed's next move could decide the market's fate. Investors, analysts, and everyday people all wait for clues about what's coming next. Stay alert to these signals. They're the real drivers behind the headlines. By keeping an eye on interest rates, you can anticipate market shifts before they happen. In crypto, timing is everything. Being proactive, not reactive, can make all the difference in your investment journey. Let's see where Bitcoin could be headed next, as the story of interest rates and crypto continues to unfold. Bitcoin leads the crypto market, and its next move could be historic. With lower interest rates and growing institutional adoption, analysts predict Bitcoin could reach $130,000 to $154,000 by late 2025. This forecast is rooted in Bitcoin's halving cycle, which historically triggers a peak about 18 months after each event, right around October 2025. A stable Bitcoin price now gives investors confidence to explore altcoins, setting the stage for a broader rally. The momentum is building, and the path of least resistance appears upward. Will 2025 be Bitcoin's record-breaking year? Investors are watching closely. Crypto markets move in cycles, like seasons, from optimism to euphoria, then decline and stagnation. These cycles are tied to Bitcoin's 4-year halving, which reduces new supply and often sparks a bull run. We're now in the late stages of a bull market, with a peak expected around October 2025. Altcoins usually peak a month or two after Bitcoin, as investors rotate profits into smaller coins. This altcoin season can bring explosive gains, though this cycle may be more measured than the wild run of 2021. Economic tightening means less speculative capital, but even a mini altcoin season could deliver big returns for smart investors. Understanding where we are in the cycle helps manage risk and expectations. Not all cycles are the same, but the patterns are clear. The next few months could be pivotal for both Bitcoin and altcoins. Stay tuned for which projects might lead the charge. Let's look at the contenders. Bitcoin is king, but Ethereum is the queen, powering decentralized apps and holding long-term value. Ethereum's supply on exchanges is at a multi-year low, signaling a potential supply shock and price surge. Yet, competitors like Avalanche, AVAX, and Solana (SOL) are gaining ground, offering faster, cheaper transactions. Analysts see Ethereum reaching $5,500 to $7,300, but AVAX and SOL could see even bigger percentage gains. Diversification is key. Investors are spreading bets across multiple Layer 1 blockchains for higher growth potential. The race for dominance is fierce, and innovation is driving the market forward. As these platforms battle for users and developers, the winners could define the next era of the internet. Watch closely. Today's underdog could be tomorrow's leader. The competition is healthy for the ecosystem. Let's dive into the top altcoins to watch. Beyond Bitcoin and Ethereum, altcoins like Avalanche, Solana, Polkadot, and Sui are making waves. AVAX has surged over 35%, with analysts predicting it could triple in value if momentum holds. Solana's speed and low fees have made it a developer favorite, with a $400 price target in sight. Polkadot's upgrades and focus on blockchain interoperability could double its price, while Sui's rising total value locked signals growing adoption. Each project brings unique strengths, but risk and reward vary. Some analysts favor AVAX for its risk-to-reward profile, while Sui is a rising star to watch. The altcoin landscape is dynamic. Staying informed is crucial. Let's connect these trends to the bigger economic picture. How do macro forces shape crypto's future? The strength of the US dollar is more than just a number on a chart. It's a powerful force that shapes global markets and influences everyday financial decisions. Mortgage rates, which are closely tied to the dollar's value, directly impact crypto prices and the broader investment landscape. When the Federal Reserve cuts interest rates, borrowing becomes cheaper, mortgage demand surges, and liquidity flows more freely through the economy. In this environment, investors often seek alternative assets like Bitcoin, searching for higher returns and protection from currency devaluation. A weaker dollar frequently translates to stronger crypto prices, as people look for ways to preserve their wealth outside traditional currencies. Investors turn to assets like gold and Bitcoin as hedges against inflation, hoping to safeguard their purchasing power. Bitcoin's limited supply and decentralized nature make it especially attractive when the dollar loses value or inflation fears rise. As the dollar declines, the appeal of digital assets like Bitcoin often grows, drawing in new investors. But if the Fed reverses course and raises rates, the dollar strengthens, borrowing costs rise, and the flow of money into riskier assets slows down. In these moments, riskier assets like crypto can suffer sharp declines as investors seek safety. That's why even a pause in rate cuts can trigger a crypto sell-off, as uncertainty creeps into the market. Understanding these macro connections is absolutely key for investors who want to stay ahead of the curve. Crypto doesn't exist in a vacuum. It's deeply tied to global money flows, central bank decisions, and economic policy. By tracking the Fed, the housing market, and the dollar's movements, you can anticipate crypto's next moves and make more informed decisions. It's not just about understanding the technology behind crypto, it's about timing, context, and recognizing the bigger economic picture. The smartest investors look beyond the charts and headlines, connecting the dots between macro trends and market moves. So let's talk about building a winning crypto portfolio that's ready for whatever comes next. How do you position yourself for what's next in this ever-evolving financial landscape? Building a crypto portfolio is like assembling a championship team. Diversification is your defense. Spreading investments across Bitcoin, Ethereum, Solana, Avalanche, and Sui can balance risk and reward. A sample portfolio from July 2023 is up 14%, with smaller coins like Kronos delivering outsized gains. Adjusting your lineup is key. Shift capital to outperformers like AVAX or Chainlink as trends emerge. Most important is having an exit plan. Don't let emotions dictate your moves. Plan to take profits as the market peaks, likely between October and December 2025. The goal: double or triple your investment, then lock in gains before the next downturn. A disciplined strategy beats hype every time. Now, what should you watch as 2025 approaches? As 2025 ends, crypto faces both huge opportunity and real risk. The Fed's interest rate policy is the top factor. Any pause or reversal could shift the market fast. Watch Bitcoin's price action. A peak around October could signal the cycle's top. After Bitcoin peaks, altcoins may rally in a final explosive altcoin season, but risk is highest then. The setup is explosive, but volatility will be intense. Keep a close eye on Fed decisions, Bitcoin's momentum, and the rotation into altcoins. Have a clear profit-taking plan. Don't get caught by surprise. For prepared investors, 2025 could be a historic year.